The Twin Cities real estate market in 2021 has been a bit of a roller coaster. Is it going to continue, or are we seeing a shift here in Q3? Hey everyone, I'm Nick Sundahl with Ache to Homes, and this is Minneapolis Living. If it's your first time watching any of my videos, this channel is dedicated to a couple of things. One is showing off the great state of Minnesota, and more specifically, the Twin Cities of Minneapolis and St. Paul and what it's like to live here, as well as the real estate component with market updates, as well as how to navigate the real estate transaction. So if that's the content you're looking for, you came to the right place. Hit the subscribe button. When you're there, ring the bell, that way you're alerted when I upload new content. And if you're thinking about moving to the Twin Cities or around the Twin Cities, you have to reach out. You can call, text, email, slide into my DMs on social media, but I'd love to start that conversation with you. Now, as I mentioned, I really want to focus on Q3 here, but I want to give you some context of what happened in the first 6 months of the year to give you an idea of what we're seeing right now in the market. I'm also going to bring on a very special guest, Miss Erin Bergem of New American Funding. She is a local loan officer, and as you know, real estate is very local. So just because of what's happening here in the Twin Cities doesn't necessarily make it the same across the country. So if you were living under a rock, you may not have known that the real estate market was absolutely on fire the first 6 months of the year. As a matter of fact, buyers were clamoring to get into homes, and this was coupled because of super low inventory and super low interest rates. And I think a lot of people got very, very tired of either paying rent or being in a smaller place where they needed to go get more space during this crazy pandemic. But numbers-wise, it is still really strong. As a matter of fact, the median sale price in the Twin Cities is $350,000. This number is based on single-family homes, traditional sales, so no short sales nor foreclosures, as well as pre-owned homes, no new construction. Most people are not buying new construction. They're buying either their first home or second home, which usually is a pre-owned home. So at $350,000, we saw a raise at this time last year of almost 12%. So that is a crazy number to think that homes went up almost $30,000 from the previous year, which is just bonkers to me. We also saw record low inventory. As a matter of fact, in the middle of the year, we were at 0.6 months of inventory. So 2/3 of a month. 20 days, which means if we didn't take any listings, we would run out of inventory in 20 days, 3 weeks. You couple that with the record low interest rates when it comes to inventory, and the interest rates continuing to fall from 2020 through 2021, and you saw prices go way up, and that's where you're seeing that 12% gain. Now, the next couple of metrics I wanted to touch on are days on market. So that is from the time you list to the time it goes pending, which means all contingencies have been removed, is actually at 10 days. That is up, or that's down 50%, which means that this time last year, it was taking 20 days. And if you look at shows to pending, which means how many showings a home is taking before it goes to that pending status, that average is at 20 showings, which is up 18%. So we're getting more people through the door, which means they're flying off faster and they're going for top dollar. Now, if we compare what happened in the first 6 months of the year to what is going on in the third quarter, there are some really interesting numbers at play here. As a matter of fact, we saw home prices drop just slightly. If you take just September, homes actually dropped about 2%, which isn't a huge deal. But if you couple that with one extra day on market, which is 11, and you're also talking about inventory going up in September. It went from 1 month in the previous 6 months to 1.4 months, which means more and more homes were coming on the market, but people weren't buying them as fast, which drops prices. So that's an interesting shift to see, especially in the third quarter. We usually don't see that until the fourth quarter. Now, I have a theory that most buyers really got tired of losing in multiple offer situations, and so they took a break from the market. We also saw a little bit of volatility when it came to the interest rates. So people got a little bit weary about what was going on with interest rates and how their buying power was affected. And then you also saw the comps. We saw record numbers that were being set in the early part of the year, and then sellers would now sell their home at those numbers. So I think there was a lot of factors at play that came into why we saw a little bit of a dip in September and why we could see this moving forward. Now I'm going to bring in my discussion with Erin Bergem with New American Funding. So glad you could join me today. If you would be so kind as to introduce yourself, who you're with, and we'll dive in a little bit about what the market looks like from your perspective on the lender side.
Sure. Yeah. Thanks for having me, Nick. So I'm Erin Bergem, and I work with New American Funding. I've been a loan officer for over 15 years.
Okay, awesome. And for just full disclosure, Erin and I do work together as she is a preferred lender of mine. So if you have any questions, if you want to be put in touch with Erin, all of her contact info will be in the description below. And don't hesitate to leave any comments as well. So when it comes to the housing market, what are we looking at, or in terms of the lending market, what are we looking at in terms of applications, rates, and is there some correlation that's going on there?
Absolutely. Things are definitely starting to slow down a bit when it comes to applications. Refinance applications have definitely slowed down, as well as the purchase applications. The refinance applications have declined for the fourth week in a row now because rates are starting to increase. So the more that rates are starting to increase, the less refinance benefits people have, unless you're doing cash out or something like that. But most people have a pretty good interest rate right now. So it's not as big of a benefit as it once was when the rates were, in the high twos or whatever, because they are starting to creep up to the, low to mid threes.
Right. And that's interesting because in 2020, we had multiple records set in terms of low interest rates, right? They just continued to drop precipitously throughout the year. And then they've ticked up here and there throughout the year, but we're still at historically low levels, which is obviously advantageous. But I think also so many people were refinancing in those times, right? Anybody that
Absolutely.
bought, myself included, I just refinanced. We bought in 2018 and where interest rates were almost upwards of 5%. So you think in terms of anybody that bought in the last 3 years could refinance and realize at least a much lower monthly payment.
Definitely. And a lot of people would even get cash out with a lower interest rate and still be able to keep their payment where they're at. So, it was a great time for people who were wanting to do home improvement projects, things like that, to get some cash out.
Yeah. If anybody's in a long-term property, if this is your forever home or things like those types of properties where you're going to be there for 7, 10, 15 plus years, pulling out a little bit of equity to handle maybe some high interest debt or like you said, doing a renovation project that you've wanted to do is probably a smart move to do it now while rates are still so low and be able to, maintain that, monthly budget.
Absolutely. And while the values of the homes are still so high, there's so much equity still to be had.
And so, we talked about this a little bit, earlier in the week, but, we had mentioned that interest rates are ticking up. I got some information that 4 major institutions that kind of track these things are looking at the rise in interest rates over the next year. And it could be anywhere from 0.25% at the low end to maybe a full point.
Could be.
Yeah. And so what does that look like when you're talking about, the median sale price in the Twin Cities is $350,000. I think it's actually closer to, if you're looking at single family homes, it's upwards of $370,000. What does that look like in terms of prediction wise, how that could affect somebody's mortgage payment, over from between now and say a year from now?
Sure. Well, according to Freddie Mac studies, that they just had in 2021, the average home price was $350,000 and the interest rate was about 2.875, right around there. So for a principal and interest payment, it would have been $1,452. And then there was 12% appreciation in 2021, which is obviously we know an exorbitant amount of appreciation for homes,
Right.
right? Not normal. So 2022, the average home price is going to be 392. What you would have paid for 350 now is going to go up to 392, and the rate's estimated to go around 3.3, 3.4%, which then puts your principal and interest payment at 1740. That's quite a big difference in a monthly payment for buyers.
So we're talking about $300, and that's might be on the conservative side.
And even with the appreciation, estimated to only be 5.3% in 2022 into 2023, that's still going to put the 392 home to the 413,000 price point, and the interest rates are expected to be 3.8 to 4%. That's going to put your payment to 1925, 1930. I mean, that's a big difference. You take it starting out at 1450 and you go up to 1940. That's a huge jump for people.
Right. If just for somebody who's looking to wait, right, and play. Yeah,
Right.
we get this fairly often, like, oh, well, I'm going to wait for rates to go back down, or I'm going to wait for home prices to go back down. You and I have actually had this discussion multiple times when it comes to buying power, right? And that's where that monthly mortgage payment really screams at you, because it's not just that 350 house that people are looking at, it's now going to be the 392 house.
Correct.
Right. And what if they were only going to be lent $350,000 to purchase a home?
It wouldn't be, it probably wouldn't be the home that they're expecting, right? It's not the home they're expecting it to be.
Right. Now the school district that you wanted might not be in play, or whatever area of town that you want to live in might not be available anymore because those homes just don't exist. Hey, if you're finding any value in this video, I would love it if you hit the like button. It helps my videos get out to more and more people just like you that are looking for this type of information. If you have any questions, comments, or concerns about the market, please leave them below. But of course, don't forget to subscribe. What are you seeing? I'm sure what we were dealing with in the spring, when it comes to, helping buyers get into that property, win in the multiple offer situation, you play an integral part of making sure that that person is as qualified as they can get when they submit their offer. Are you seeing over the last, what have you seen in terms of, is that still the same today? Like making that call and getting the full pre-approval, in terms of your clients winning, or have you seen a little bit of that cooling off where you're not having to necessarily really be as involved in terms of getting that deal sealed?
Well, I mean, I think for me, myself, I've always been like that. I've always called the listing agent and said, here's what my clients are. They're great buyers. Here's why they're good for your home, whatever, to, really kind of reassure people, because there's so much unknown, right? And there's, real estate agents like to work with loan officers that they're comfortable with. And so, they want to make sure that whatever lender is going to be doing the financing on their listing is going to be able to get it done. So I think that's really important to just, let people know who they're working with and who the potential buyers are. I also think it's always been really important to be fully pre-approved and not pre-qualified, because there's a huge difference between somebody sending me over their pay stubs and saying, here's what I make and I'm self-employed and here's what my taxes show. And I go off of what they say because they seem like they know what they're talking about, and they're, right, it's their job. And I just assume, don't ever assume, because a lot of times we get things and it's not exactly how they thought it was. And maybe unbeknownst to them, they didn't realize that they wrote off as much as they did on their taxes, or they just started receiving overtime. And if I didn't really look at those pay stubs and do some in-depth, detective work, basically, to make sure that they've been doing their overtime for 2 years, or they've been working at a part-time job for 2 years, or whatever the guidelines are, that could screw up a complete purchase. And I have saved 3 or 4 of those just this year from people who are like, I had this house, it didn't get approved. My lender said it didn't work anymore. And I'm like, well, what do you mean it doesn't work anymore? And then we kind of dive into it, and they're using income that they never qualified for to be.
Right. The first thing that any listing agent, let alone the seller, wants is to make sure that you're going to close.
Right.
And you're going to pay what you say you're going to pay, right? They want to
Exactly.
know, they need certainty in terms of what they're walking away with, and then it's going to happen. And it's going to
Yep.
happen in the timeline that has been set forth. So I completely agree with you. And obviously, we were all put a bit to the test to make sure that those things were done properly, especially in the early part of the first 6 months of the year. In a way, it's kind of trained us to be much more adept in dealing with curveballs now, because it's not as crazy, right? We have a bit of a cool off. There are more, the homes are staying a bit more days on market this last, and as of September, they're up 83%, which is obviously, in perspective, it's not much. It's went from 6 days on average to 11 days. So it's not like homes are, all of a sudden they're just sitting on the market. They're just not going in 10 offer deals and they're waiting, a week before they get locked in. So,
which is really nice for buyers. I feel like, because I had a lot of buyers who just missed out on homes because they couldn't get there fast enough to see them. People were buying them sight unseen, and that's kind of scary for buyers sometimes, especially first-time home buyers. So I'm glad that it's starting to kind of just settle down a little bit. So, more of those first-time home buyers have more of a level playing field, I guess,
It's much better for everybody, right? As great as it is to talk about how hot the market is, one, it's not sustainable. And two, it's not healthy in terms of that kind of growth that fast, right? We need, home value appreciation and being able to get people into, their dream home or their first home or whatever it may be, is much more important, as well as making sure that their financial ability to afford that property is met. So, anything else that you're seeing that that the people viewing should know?
No, I was just going to play off of the fact that, like, I had a lot of people who were wanting to move up buyers. Like, my house is too small. I want to, get into the $500,000-$600,000 home, but they wouldn't list their house because they didn't think they'd be able to find a house in time because it was so competitive. So again, this is really nice for people who are wanting to move up. They can take a little bit of time. Their house is going to fly off the market where they have nowhere to live. They have to go live with their in-laws, with their kids or whatever. So I think now, overall, historically, this is the best time to be looking for a home. The interest rates are still extremely low. There's not as many crazy home buyers out there right now.
Right. Yeah.
So you have, a little bit more level field. You have time to think about something before just making an offer and not even really having time to even know what you're getting into.
Right.
And I think that, generally speaking, the interest rates do start to creep up over the new year. They always do. And then they get higher because the spring is going to be super busy. It's going to be hopping again. I have no doubt in my mind that it's going to be crazy again. And that's when the interest rates are going to go up. It's just what's going to happen.
Right. One last thing I wanted to touch base with you on, and that is the loan limits when it comes to conventional loans. Now, what do they sit at as of right now?
So right now it's 548,250.
Okay. And they're going up, correct?
They're going way up. And so there's a calculation. We don't know exactly what it is right now, but the estimate is that it's going to go up to either $625,000 or $630,000 loan amount.
Wow.
So you can buy almost a $700,000 house and, put down some money, and you're still in that conforming loan amount, which means that you're going to get a lower interest rate overall usually.
Right. That keeps you in the conventional loan and not have to jump into jumbo status, which is usually premium, or have supplemental financing.
Right. Yeah,
right.
Exactly.
Okay. Right there. Right. Okay.
Yeah. So we should know the deadline, the drop dead amount that we're going to be able to go up to usually by the end of November or so.
Okay.
But all the forecasting, everything is saying 625 minimum.
Wow. And that starts January 1st?
A huge jump. We've never had that. Actually, we're able to do that right now. So if somebody were to find a home,
really,
we at New American Funding right now are going ahead with that $625,000 loan amount limit and able to do that.
That's
right
awesome.
now.
Cool.
Mhm.
Well, I
Yes.
really appreciate you taking the time to chit chat a little bit about, what the lending side of this looks like and how to, where we're at in the market and what it deals with in terms of people's financial wherewithal to purchase homes. And we'll have you on next quarter.
That sounds great. Thanks for having me.
Okay, thanks.
Take care.